The recent spot Bitcoin ETF approvals have put crypto firmly back in the spotlight. And with 2024 likely to be a big year for the markets, many investors are wondering whether they should get exposure to the asset class that's had the highest returns over the last decade, as per analysis by none other than BlackRock. That's why today we're going to tell you 10 things you need to know before you invest in crypto. By the end of this video, you'll have the information you need to make an informed decision. Let's dig in. The first thing you need to know is that there are multiple different types of exchanges, platforms, and products which offer crypto. The one you've been hearing a lot about lately is exchange-traded funds, or ETFs, which provide exposure to crypto in a highly regulated and secure way. There are just 3 problems with ETFs and similar products. The first is that they trade during regular stock market hours. This is a problem because crypto itself trades 24/7. The outcome of this can be a dislocation in price between the ETFs and the underlying asset, or the inability to get in or out before a big price move. The second problem is that they don't allow you to own the underlying asset directly. You see, in crypto, it's common practice to custody your own funds. Of course, this is not for everyone, and it also comes with its fair share of risks. The trade-off is that it eliminates the counterparty risk you get with ETFs. Now, the third problem is that there aren't many exchange-traded products that offer exposure to altcoins, that is, cryptocurrencies beside Bitcoin. For some investors, exposure to Bitcoin's BTC is sufficient, but other investors may be interested in cryptos that have the potential for returns that are 10 to 100x higher. If you count yourself in this category, then be sure to check out the Coin Bureau deals page. It's got trading fee discounts of up to 60% and sign-up bonuses of up to $50,000 on some of the best crypto exchanges. Signing up is free, so it's worth making an account on a few to see which one you like best. I'll just note that these deals are only available for the viewers of this channel and for a limited time only, so check out the Coin Bureau deals page in the description before it's too late. Now, the second thing you need to know before you invest in crypto is that cryptocurrencies are volatile, particularly altcoins. It's normal for BTC's price to go up or down by up to 10% in a matter of minutes. For altcoins, it's normal for their prices to change by 20% or more in the same period. Now, obviously, this volatility can take a significant toll on your mental health if you don't know what you're in for. It also has the potential to tempt you into making emotional decisions about your investments. The result is that many investors often end up buying during massive rallies and selling during sharp crashes. If you're wondering why cryptos are so volatile, it's for multiple reasons, but the main one is that cryptos are incredibly speculative. This is an inherent feature of the asset class because the explicit purpose of crypto is to replace the existing financial system, with each project promising to replace a certain aspect. Another contributing factor is the large amount of leverage trading in the crypto ecosystem. This has the effect of causing small dips to turn into crashes during bear markets and small rallies to turn into massive pumps during bull markets, as leverage traders are liquidated or squeezed out of positions. Thankfully, there are 2 things you can do to minimize the effects of this volatility. The first is to be aware that cryptocurrencies with a larger market cap are not nearly as volatile as those with a smaller market cap. Just remember that the trade-off of this lower risk is lower rewards. The second thing you can do is to minimize the amount of leverage you use during trading, or at least be wise about where you set your stop losses. Being familiar with technical analysis can help with this, and I'll note that we have crypto-specific technical analysis tutorials on this very channel, if you're interested. And by the way, if you're enjoying the video so far, be sure to smash that like button to give it a boost. Now, this ties into the third thing you need to know before you invest in crypto, and that's that not all cryptos are created equal. Broadly speaking, there are 2 types of cryptocurrencies: coins and tokens. Coins are the cryptos used to pay for transaction fees on the blockchain they belong to, such as BTC on Bitcoin. By contrast, tokens are cryptos that can basically be made from thin air using smart contracts on certain cryptocurrency blockchains, namely Ethereum. Whereas coins derive their value from the blockchain they belong to, tokens often derive their value from their utility on their associated dApp or protocol. Now, this taxonomy is significant because cryptocurrency coins tend to perform better than cryptocurrency tokens. This is simply because there's more skin in the game involved in creating a cryptocurrency blockchain from scratch. Anyone can create a cryptocurrency token in minutes with certain dApps. That's why there are literally millions of cryptocurrency tokens, but only a few dozen cryptocurrency coins. Naturally, the overwhelming majority of cryptocurrency tokens have no utility whatsoever. The ones that do are more likely to perform well, but are still much more speculative than crypto coins. What ultimately determines whether a coin or token will do well, however, is the narrative they're associated with. For example, Bitcoin's BTC is considered by many to be digital gold. This is one of many narratives that tend to move prices, and you can learn about the others using the link in the description. Okay, this relates to the fourth thing you need to know before you invest in crypto, and that is that finding quality information about crypto projects is very difficult. Now, this is for many reasons, including a shortage of educational material, the complexity of most crypto projects, and just a general lack of info about them. Now, unfortunately, this fact has resulted in lots of investors losing lots of money, and it's a problem that we sought to solve when we started this YouTube channel almost 5 years ago. As we've grown, though, it's become harder and harder to cover the smaller and newer crypto projects with the most potential. Fortunately, we came up with a solution to this problem too, and that was to launch a subscription service called the Coin Bureau Club. Members get weekly altcoin reviews of crypto projects that they voted for us to cover. They also get access to our research feed where we share exclusive crypto insights. And more importantly, members get to see the personal crypto portfolios of the core members of the Coin Bureau team, as well as which cryptocurrencies are on our watch lists. And to top it all off, members get access to an exclusive set of Discord channels where they can discuss all of the above and much more. So, if this sounds interesting to you, then take a second to check out the Coin Bureau Club using the link in the description. The landing page has detailed information about what you can expect, including a video explainer, and even contains publicly verifiable testimonials from a few of our thousands of members. Again, link is in the description. Do check it out. Now, the fifth thing you need to know before you invest in crypto is the difference between a crypto's market cap and its price tag. Contrary to popular belief, it's not a crypto's price tag that determines how high it could go, but its market cap, hence the earlier comments regarding volatility and market cap. This is something that most first-time crypto investors don't know, and the consequence is that some cryptos with small price tags tend to outperform other cryptos with larger price tags. That's because new investors will see the low price tag and assume they'll be billionaires if it gets as big as Bitcoin. In practical terms, this means that you need to take both factors into account. The price tag, because it will be appealing to new and inexperienced investors, and the market cap, because that's fundamentally what determines how high or low a crypto could go in percentage terms. And here's a pro tip. You can get a sense of how big a coin or token can become by comparing it to larger cryptos in the same niche or category and seeing how big they became during the last bull market. Just be realistic with your expectations and accept that some new small cap won't overtake BTC or ETH anytime soon. If you want to go one step further, you can assess how available these low price tag, low market cap cryptos are to new investors. This means checking to see if they're listed on lots of exchanges, particularly those with US users, since this is where most crypto investment comes from. This underscores the importance of choosing the cryptocurrency exchange that's right for you, and I'll remind you that the Coin Bureau Deals page has some of the biggest discounts on trading fees that the industry has to offer, as well as sign-up bonuses in the tens of thousands of dollars. Again, link is in the usual place. Now, the sixth thing you need to know before you invest in crypto is another thing that I touched on earlier, and that's that self-custody is vital. In crypto, there's a saying which goes, "Not your keys, not your crypto." This means that if you don't hold the private keys to your crypto wallet, the crypto in it isn't yours. Put differently, if you aren't asked to write down a combination of 12 or 24 words which represent your private key when you create an account somewhere, then you're dealing with a custodial service. In plain English, someone else is holding that crypto on your behalf, just like a bank holding your money. Newsflash, folks, the money in your bank technically isn't yours either. More about that in the description. I digress. Anyways, if you're serious about financial freedom, that is, the ability to spend your assets however you want and whenever you want, then you must custody your own crypto. You must create a crypto wallet of some kind and keep the coins or tokens you aren't actively trading on that wallet at all times. As with cryptos themselves, there are multiple different types of crypto wallets, including mobile wallets, browser wallets, and desktop wallets. If you're serious about keeping your crypto secure, though, you're going to need a hardware wallet, a physical device which lets you store your crypto entirely offline. If you haven't purchased a hardware wallet yet, then you should once again check out the Coin Bureau deals page. That's because it has the biggest discounts on the best hardware wallets this industry has to offer. Coin Bureau Club members can also get a chance to win free hardware wallets by giving feedback, just FYI. I'll also note that not all cryptos are supported by hardware wallets, so be sure to do your research before buying one. We've done detailed reviews on almost every hardware wallet on the Coin Bureau website, so if you have any questions about any of that, chances are you'll find the answers there. Okay, the seventh thing you need to know before you invest in crypto is that it's wise to create a diverse crypto portfolio. This might sound silly given that every coin or token falls under the crypto umbrella, but by now you'll know there are varying degrees of risk and reward, as well as utility. For those unfamiliar, Bitcoin's BTC is seen as the safe haven asset within the crypto industry. When the market is crashing, money tends to flow into BTC. Conversely, when the markets are rallying, money tends to flow out of BTC into more speculative altcoins, starting with ETH and working down the list. Similarly, stablecoins, that is, cryptos that are backed by and pegged to fiat currencies, mostly the US dollar, are also seen as safe havens when the crypto market is struggling. The catch is that some stablecoins are seen as safer than others, and each comes with its own features and utility. If you watched our recent video about how to construct a crypto portfolio, you'll know that a well-rounded crypto portfolio includes a few large caps, a few mid caps, a few small caps, and some stablecoins. You'll also know that it's best not to buy more cryptos than you can keep track of. You'll even know that the best strategy is to ensure that you have exposure to the crypto narratives that are likely to be front and center during the next bull market. If you don't know what these narratives are, you can watch our video about that using the link in the description. Seriously, give it a watch. Now, the eighth thing you need to know before you invest in crypto follows from the seventh, and that's to understand your time horizon. For context, crypto tends to follow a 4-year cycle, with the first 1 to 2 years being a bull market and the remaining 2 to 3 years being a bear market. These crypto cycles are believed to be driven by the Bitcoin halving, which is when the amount of BTC coins awarded to Bitcoin miners is cut in half. This happens every 4 years, and the next halving is scheduled for April. The crypto bull market has historically begun a few months after the halving. Now, assuming history repeats, this means that the crypto bull market won't begin until sometime in the summer or the autumn, with BTC and most altcoins likely hitting new all-time highs around that time. However, the actual cycle highs may not come until sometime in mid to late 2025, again assuming history repeats. While the chances of you timing the exact top are very slim, if you've been allocating to the coins or tokens you're interested in before the crypto bull market enters its mania phase, chances are you'll be sitting on sizable gains by the time the cycle highs come around. Most of the gains that you could have made. Believe it or not, though, you may not want to sell. As I mentioned in the introduction, crypto has been the top performing asset class of the last decade. In retrospect, holding and accumulating large and established cryptos like BTC through the ups and downs would have been more profitable than selling. This highlights the fact that the most important time horizon here is your own. If you're looking to make sizable gains in the next 1 to 2 years, then you're better off following the 4-year cycle. If you're trying to build wealth for the long term, however, you might be better off accumulating and not overthinking it. This pertains to the 9th thing you need to know before investing in crypto, and that's that the only 2 things that have outpaced inflation in recent decades are technology and finance. If you think about it, crypto is a combination of both, and it's also the only asset that can't be seized. This is very valuable. The caveat is that this applies only to truly decentralized cryptos, because only truly decentralized cryptos can maintain these attributes. For the time being, Bitcoin's BTC is the most decentralized crypto, and this essentially makes it a hedge against the entire financial system as it exists today. Given how messed up the financial system is, hedging against it in some way isn't the worst idea, especially with an asset that can't be easily confiscated. This is one advantage that BTC has over gold. All you really need to store and move BTC is the seed phrase to your wallet, which you can memorize. The caveat in this case is that all BTC transactions are publicly viewable and therefore traceable. It's safe to say this isn't ideal if you want to protect your privacy or truly want to escape the existing system. Even so, it's the best hedge that we've got against the current financial system, besides gold. To really drive the point home, I want you to consider the fact that the financial system that central banks want to implement is one where everything is surveilled and where every single asset you own exists on a network that they control. And this isn't a conspiracy theory. They've published multiple reports about this, and we'll leave a link to one of them in the description if you're still skeptical. Anyhow, although it's exciting to think about how much money you can make in crypto, it's important to remember that it's going to become more and more difficult to keep this money if the financial system continues its current trajectory. It's wise to keep some of those gains in something that you can actually keep, so to speak. And this brings us to the last thing you need to know before investing in crypto, and that's that there are a lot of scams out there. When you combine all the factors we've mentioned so far, what you get is a recipe for a lot of misleading information about crypto that can appear very convincing. This can range from fake airdrops to fake giveaways, the latter of which is becoming ever more common as deepfake technology continues to evolve. Impersonators of popular crypto personalities also run rampant during bull markets, and it's impossible to report them all or delete all their comments. As a rule of thumb, if it sounds too good to be true, that's because it is. And if you ever get a DM from a popular crypto personality, know that it's completely fake. And if you're brave enough to go interacting with dApps and protocols in crypto's ecosystem, do your research, else your wallet could end up being drained. This just underscores the importance of keeping any coins or tokens you're not actively trading on a secure hardware wallet. And I'll remind you that the Coin Bureau deals page has the biggest discounts on the best ones. And regarding common scams and how to avoid them, we recently did a video about that, and you can find the link to it in the description. Okay folks, that is all for today's video. So if you learned something new, then smash that like button to let us know. If you want to keep learning, then be sure to subscribe to the channel for more educational crypto content. And if you want to help others learn, then do take a second to share this video with them. As always, thank you so much for watching. My name is Guy, you've been watching the Coin Bureau, and I hope to see you all again soon.